Welcome back to Liberty and Finance. We have a returning guest every Tuesday night. We have the weekly market update with Miles Franklin Precious Metals CEO Andy Schectman, and we're here live tonight. Andy, thanks for joining us on Liberty and Finance.
Great to be here. I hope I'm able to keep up with you. I'm going on 2 days without sleep, so we're going for the marathon. But it's good to be here, and thanks for having me, pal.
We had some questions already in the live stream asking about how your return travels went, because you told us about your harrowing experience of an extremely volatile flight on the way out to the Vancouver Resource Investment Conference, VRIC, and it sounds like you had like the worst turbulence you've ever experienced.
Yeah, I can tell you,
flying.
A lot of people in Vancouver watch your show because I must have been asked by 20 people, how was the flight? I heard it was bumpy. So yeah, it was crazy flight on the way there. Look, the craziest thing about flying from where I am in Southern Florida to Vancouver is the length of the flight. Any way you cut it, it's almost a 12-hour day. So yesterday, as I was mentioning to you offline, I woke up at 7 a.m. I had some presentations. I had some interviews. I had a 4:30 interview with Kitco that went till almost 6, and a few other things that we had to do before we checked out of the hotel. Headed to the airport for a 10 o'clock flight to Toronto, getting in at 5:30 in the morning, 2.5-hour layover into Miami at 12:30 in the afternoon. And I've haven't closed my eyes since. So just trying to keep it all together and make sure I was able to come here in one piece tonight. But as long as I don't fall asleep while we're talking, this will be a good talk.
Well, in addition to my usual attempt at trying to skim the live chat list for specific questions for you, I'll try to keep you alert along the way as well.
So, all right, I'm okay.
So sit up straight there.
Yeah, I'm just teasing. It's all good.
Well, we're grateful for your safety. I'm sure your wife and family are grateful for your safe return home.
Yeah, I hope so.
Yeah. We have right away, we'd like to find out more about the show, the Vancouver Resource Investment Conference. We've had Jay Martin on our show as a guest. He's the host and organizer of that conference. In fact, that's what he explained to us, is that his last decade or so was in doing conference organizing prior to starting his own channel, The Jay Martin Show. So could you tell us what were your key takeaways, any really aha moments or eye-opening, ear-opening things that you saw or heard at the conference that are sticking with you and that really shifted your view, adjusted your view of the way you've been looking at the way things are progressing around us?
Yeah, if we go back, done again, like to February 2021, silver squeeze as an example, the feeling that I got over the last year or two was with the vibe from the new people who came on and have been attracted to silver and its undervaluation, its compelling and intriguing story, is buying it for profit, buying it to get wealthy. And in a market that is as counterintuitive and volatile as this is, and counterintuitive really being the key word here, where I've been telling people, look, what is giving me optimism is the fact in an environment where the silver price was only up just a couple, 2-3% in 2022. Now, let's remember, however, that was in the face of the strongest dollar we've seen in decades. And the last time the dollar was this strong, silver was $5 an ounce. But what's really given me optimism is seeing the continued drawdown in physical supply. Now, if you aren't really paying attention to that, which isn't easy to come up with those numbers and to come up with the statistics of what's being shipped out of COMEX and what's not just being moved around, because there's a lot of movement in the COMEX silver market, a tremendous amount of movement. And it's almost as if these banks buy and sell amongst each other to show a market that has great activity in it, yet it doesn't go anywhere. What really is the important part are the deliveries that leave the ecosystem. Mm-hmm. And it's been that has kept me very optimistic. But it is, I think, has been a little bit of a disappointment to a whole group of people who came into this market with expectations of making profits reminiscent perhaps of GameStop or AMC or maybe even more in terms of what we've seen in cryptocurrencies, where the story is so compelling that, geez, in the wake of 40-year high inflation and chaos in around the globe and here at home, that solar should have performed better. And I think that has been a little bit disappointing to a lot of the people who came into this market over the last couple of years. And I was pleasantly surprised to see a departure from that. And there was a tremendous vibe at the show, but it is one, I think, now rooted more in concern about what's happening and looking at gold and silver, at least in terms of the physical supply, or the physical side, not the mining shares, but the physicals as a vehicle to protect yourself from what's coming down the pike. There was genuine concern with everybody I spoke to, not about getting wealthy, not talking about how undervalued silver is and its massive upside potential. And do you think it could go to $400? Do you think it can go to $600? Whenever I hear those questions, I think, yeah, I mean, mathematically it's plausible, and certainly in its relationship to gold, and certainly if gold meets the expectations that some in the industry are talking about. A lot of people are saying $3,000 this year, maybe more. And if you just simply divide it by its geologic ratio of 7-to-1, those lofty numbers are really not out of line or really foolhardy at all. In fact, they're logical, and probably someday will come into focus, where the geological footprint has to come in line with the real price in a market that has tremendous demand. In fact, the Silver Institute tells us 200 million ounces shortfall this year. So in that environment where we continually are demanding more than we are producing, at some point, the cost of production has to come into line with the real life price, and especially in its relationship as well to gold that goes back, thousands of years. But what we're seeing right now, I think, are people looking to gold and silver as an alternative, maybe even to their bond portfolios, as an alternative to what was traditionally thought of as a hedge against uncertainty. And we are seeing a much more sophisticated set of questions being asked to us and concerns, and they center less around making money and more around getting out of harm's way, whether it be of the dollar or of the markets or just of all of the chaos in a world where so much is just upside down, and in a world where trust is upside down, where we can't trust our own monetary authorities to maintain the value of the dollar, as an example, or to be honest with us in many things, from what's being taught to our children, what's inside of the vaccines that they're telling us we need to take, or the unfair practices by the FBI or the Justice Department, or all of the FDIC bail-ins and the talk by the Systemic Resolution Committee saying, well, maybe we shouldn't tell the public what's going on because the public who has full faith and confidence in the banking system more than the people in this room do. And there's going to be bail-ins, but we don't want to let the public know because there'll be a run on the banks. And although that's probably going to happen, we don't want the unintended consequences. It's a constant theme of mistrust, distrust, being lied to. And I think one of the things that people are understanding in a world where everything boils down to the concept of counterparty risk, from fiat currencies to the instruments that we consider wealth, bonds and stocks and whatnot, all of those things, for the most part, boil down to counterparty risk, someone's ability to keep their promise for the thing in question and to perform, if you will. And gold and silver represent assets that, as we've often said, are not simultaneously someone else's liability. There's no counterparty risk, and that's a big deal. And I think people are waking up to that. And it's an indictment against the times we live in, I think. I know I feel that way. But that was the feeling I got. Less about, hey, silver's so undervalued, let's buy it and make a bunch of money. Rather, let's look to gold and silver as wealth in a period of great uncertainty. And, great uncertainty, no more reflective than tomorrow, with the FOMC meeting, where, most of my career leading up to the FOMC meeting, on a day like today, they smashed the crap out of gold. And what was interesting about today's action, and really what I've noticed lately over the last several days, is as we see the PM fix in London, there's that space of time after the PM fix until we get to New York, and it's traveling across the Atlantic Ocean. It's in what's called the access market, where, you know, London is closed and New York hasn't opened yet. They just knock the snot out of it. And, you know, gold's down 30, $35 early in the morning. Silver's down 60, 70 cents. And then as we hit New York, it trends up all day long and actually finishes up positive for the day. And I don't know if that is short covering by those who think they can dump the price in thin trading and cover those prices and let the price move up, or is it more perception management heading into the FOMC meeting? And, you know, I wonder, I don't know what it is, but it reeks of it not being a fair market, a honest market, where you see massive amounts of metal dumped in the thinnest markets, where if maximizing price was the objective or the goal, that is the absolute stupidest time that you could ever do it. Instead, what it is a great tool of misdirection, as we've talked about. It's a great tool of illusionary perception, where you wake up and see the price just clobbered for no reason. And if you take a step back and say, well, who in the hell would do it that way? Who would sell tremendous amounts at the worst possible time, guaranteeing you the worst settlement? And if you realize the answer, it is that it is for some sort of a perception, to maintain a perception that of dollar strength, that, you know, that what the Fed is doing is engineering a soft landing, that they'll lower interest rates and not create a massive recession, even though they changed the definition of recession, 2 consecutive quarters of negative GDP, but for some reason that's not a recession anymore. The bottom line is that we're being lied to on every level, and if not outright being lied to, we're being told half-truths or mistruths. And I think people are waking up to that. And that was the vibe that I got at this show from everyone I talked to. It was incredibly well attended, and the questions were fantastic. And none of them centered around getting rich, at least not with me. Maybe those going to the mining share presentations, but I think that it's something to mention. And if we look at what's happening over the last 10 days or so, or actually the last month, I can't believe we're already near the end of January here. We're at the end of January. We've seen market really pick back up again here in January with demand. And so I think what we're going to see, our premiums start to tick back up. We saw Gold Eagle premiums move up 1/4%. Well, that's nothing, right? You're talking $4 or whatever. But the point of it is that it's been a 6-week barrage of declining premiums in an environment where the investing public took some time off, as we've talked about. And I think things are starting to turn back up again. Not only people's concern as they reevaluate their positions for the year here in the early part of the year, but also in just the fact that people are looking at gold and silver in the proper context. At least they were this weekend. Rather than an investment to get wealthy, it's really important, I believe, to look at it as wealth, and in particular in a period of great uncertainty and upheaval.
There were 3 things you talked about just there that I wanted to highlight. One, you talked about we've been lied to. We're in an era of reduced trust. Excellent article came out just yesterday from John Rubino. He's been on our channel multiple times. He was the founder of dollarcollapse.com. He's since sold that. He started a new Substack just about a week ago. And so that's a big thing. You guys got to check out John Rubino's article from yesterday. It's called Gold and the Shrinking Trust Horizon. In like 4 pages, 5 pages, he just crystallizes all that we've been through in the last couple of decades as far as losing trust in all of our major institutions, about how they've all been lying to us, that we used to be able to, we thought, trust them. And therefore we were able to make decisions where we didn't have to micromanage our lives and let things happen globally and all that sort of thing. But now people are seeing they got burnt and they got hurt and they got burned and they got hurt, and they're pulling in and they're trusting more in their local food supply, their local things that they can hold in their hand, people they can look in the eye, people they can shake their hand of, rather than these far-flung institutions and structures. You've got to check out that article, Gold and the Shrinking Trust Horizon by John.
He's a great guy too, not just a great mind, but a great guy. And where I come from, that means something. So He's a really super solid person and with great intentions. I'm a big fan of John's. I try to catch everything he puts out.
Another thing you mentioned was uh, gold and silver, not necessarily as this moonship, rocket to the moon, whatever, but as the only true safe harbor to weather the coming storm that's really going to impact all of us very importantly, our families and our families' futures. One thing about that, I had a face-to-face meeting with a certified financial planner today who has been a source of educating many of his clients who come to him for financial advice on the truth around the money system. He asked them questions like, okay, if our country is $30 trillion in debt and all the countries of Europe are in debt and all the countries of the world are in debt, to whom is everyone in debt? To whom are all these countries in debt? And then he stops there and lets them, and he gets these blank stares and he starts educating them about the IMF and on and on. And then he says, okay, and he talks to them about where our banking system doesn't really have, how their deposits in the bank aren't really theirs anymore, that sort of thing, and gets them awakened enough, and then suggests that they might want to consider some portion of their investments and their financial future to be in physical precious metals, which is contrary to what most managed financial planners are even able or allowed to talk to their clients about. But he's been a great source of truly trying to help his people find.
Well, if he's listening to this, I think it's important to mention, if we're calling a spade, a $31 trillion debt, that's awful. I often use the statistic, a trillion seconds ago was 31,688 years ago. But that doesn't take into account Medicare, Medicaid, the $55 trillion unfunded in Social Security, and government and military pensions that push us well north of 130 trillion. And so you're right. A lot of it's owed to the American people and promises that were made to us, which I just want to talk about two things that you just said, one being the International Monetary Fund. But before I forget, now I know we do this every week. I don't know if a week or two ago we talked about the extraordinary measures that Janet Yellen used to raise the debt ceiling. And maybe we did, or maybe we didn't. But for the people out there who didn't hear this, I was just absolutely blown away by this. I was actually rather disgusted by it. It was a Yahoo Finance article a week or two ago when Janet Yellen made the admission that, hey, we need to take drastic measures to raise the debt ceiling. And what she did was she borrowed money from three funds, from the Postal Retirement Fund, from the Disabled Veteran Fund, and from the Civil Servant Fund. So in essence, she stole money from the retirements of disabled veterans, postal workers, and civil servants. Of course, if IOUs are in there, she's going to pay it back to raise the debt ceiling for their ridiculous overspending. And one of the things that I found most grotesque about this article was the next article that said, by the way, the US government just voted to give the Ukraine another $50 billion. So we're bankrupting our children, we're bankrupting our country, we're insolvent, and yet we borrow more money to give it to another country. And I have to really wonder, do you think these politicians give a damn about the Ukrainian people, or is there something much bigger at play here? And watching all of these people dying, and yet we give another 31 tanks and politicians saying we'll do whatever it takes to win this war for the Ukraine. And I mean, we're going down a really, really, really slippery slope as far as I'm concerned. And not only that, we're bankrupt. I find it to be incredibly grotesque. And, people don't talk about what Janet did to get that money in the hands of the government. But nonetheless, here we are doing the same thing they've done to Social Security, robbing it with IOUs and to fuel their rampant, stupid spending. And, that's really the part here. You got, on one hand, you got everyone waiting on bated breath to see what Powell's going to do tomorrow. Is he going to raise it by a quarter point? Is he going to raise it by 50 points? Some people say, well, you know what? They've always gave in. Maybe everyone feels they're going to pivot, including the bond traders. Maybe they won't. Maybe they'll continue to tighten. Maybe they'll make it worse on the lower and middle class, and they'll tighten things up really bad. And maybe this is the way that they can do this one time. And on the other hand, you have the fiscal side of things, the government spending money like drunken sailors, like a $1.75 trillion omnibus bill, filled with things that are so ludicrous and ridiculous. It's unbelievable. Hundreds of millions of dollars used to protect the borders of Oman and Lebanon and other countries, but not a penny to go towards protection of our border. The mismanagement, the idiocy, all of these things to me speak to the reasons to own gold and silver, even if the price hasn't reflected it. But remember, the biggest money in the world has front ran all of this, and they are pulling metal off of the exchanges. That is where you should take comfort in knowing you are doing the right thing. They asked Hemingway, how did you go broke? Little by little, then bang, all at once. And that's what's going to happen here. Little by little, we're seeing repositioning. Little by little, we're seeing things that are accelerating the de-dollarization, accelerating the trend. And the big money for the last, since 2020, since we started talking about the others, have been pulling metal off of the exchanges to prepare. And do you think there's any coincidence that the central banks have bought more gold than at any time since 1955, the second most in history by the central banks? There's no coincidence to any of this. And, so I just think that people are waking up to this, at least the people who are listening to people like you and myself and others out there who are trying to get it across that this is not about getting wealthy. This is a generational shift that if you don't get out of the way, and if you think about it, in a really spiked interest rate environment, where do you go? It reminds me of my mentor, Richard Russell, and his very famous words, which were in a bear market or in a depression, he or she who loses least wins. And I think that's really important here. To me, this is not about getting wealthy. It's about trying not to lose. And I don't know where else you put your money right now, but in something like gold and silver, looking at it as a safe haven, not as a vehicle to get wealthy. You might in dollar terms, but it won't have the same significance that being wealthy a decade ago did, when you didn't mind putting on fancy clothes and a nice watch and driving to a steak restaurant. It's not going to be the same thing when gold and silver accentuate to, highs that people have been dreaming of for a long time.
Right. And along the way, you mentioned also the risk that people are seeing in the coming storm of staying in the banking system. And I met with our personal banker yesterday and talked to him. I asked him behind closed door. I said, I've been hearing stories from a number. He knows that I'm a bullion dealer, and talking to him about the stories I've been hearing from multiple clients who have had difficulty from banks and getting extra level of scrutiny, extra level of questioning when they're trying to wire money when purchasing precious metals. Not everybody, but some, and on a recurring basis, and from all over the country. I said, was there like a memo that went out or something to bankers to tell them, hey, you gotta step up the diligence and the kind of know your customer or what's going on with them when this occurs? And he said, well, it doesn't have so much to do with the particular product that they're trying. He said there is an increase in fraud in general, and there's an increase in wire fraud in specific. He said the most common and most harmful form that they've seen of wire fraud is where somebody finds out that somebody else is selling their home. So if you're a home seller, they'll find out your information and then send a notice, an incorrect notice to your title company saying this is where you should send the wire information to. And then so the closing will happen, or prior to closing, wired money will get sent to the wrong.
We had that happen to us a few years ago. A $700,000 wire was sent to us in gentleman's name. It was a second order that he had placed. And he had told my broker that it was for the closing of a home sale, and it was a quick claim deed. The gentleman who bought the house never even saw it. House wasn't even for sale, as a matter of fact, and they somehow hacked his title. And the craziest part was they went into a notary and into the title company and got away with somehow being this person. Well, the wire came, and we've always been taught when you receive a wire that it's good. Well, that was sent $700,000 worth of gold, and indeed it was fraud. And when we met with the FBI, they told us that it was a Eastern European ring that is epidemic throughout the United States in many areas. And so, yeah, for everyone out there, never, ever accept a change of wire instructions, ever, by email, ever. That's exactly it. Because if your email gets hacked, what they're able to do is to block what you see and block what the recipient sees and go back and forth and show you what they want you to see. And that's how it happens. It's less not even your computer getting hacked as much as it is opening up a phishing email and your email server being hacked. And then they play the long game. They sit and they wait, and they'll wait for the opportunity. Oh, now's the time I can send that email saying, yeah, we changed bank accounts, send it to this account instead, when that was never sent. It's real. I believe what they're saying, but at the same time, when you see the November meeting of the FDIC Systemic Resolution Committee come out and say that there are going to be runs on the banks, and the institutions know this, but we can't let the public know it because it will spur on runs on the bank. It will incentivize. Look, if the Fed really wanted to get tough on inflation, one of the things they could do is raise the reserve requirements, really jack them up. They're at zero. So when you deposit money into the bank, your money's not there. At the very least, they're taking it and buying 3-month treasuries earning 4%, because look at what they're paying you in savings accounts. It's still crap. It's under 1%, even though rates have gone up. So they're paying you next to nothing. They have nothing backing it. You're an unsecured creditor. And then they take that money and go buy treasuries or do whatever they want with it. And risk be damned at that point, because you are an unsecured creditor. And if all goes bad, you'll be bailed in. And that's what they said. The FDI Systemic Resolution Committee said there will be bail-ins, but the public needs to know this, that there will be bail-ins, but we don't need to tell them that it's more or less a foregone conclusion that it's coming, and because it will create unintended consequences. That's what I mean by being lied to, even if it's by omission. This is why you want to remove any and all counterparty risk, even places that we once thought were safe, like a savings and loan, a bank account that, we were told, put your money in a bank account and it's there when you need it. Well, heck, the risk that you are facing is not in anywhere near commensurate with the paltry return that you're receiving.
So you've teed up the second half of the story. This gets where it gets interesting. So we're still behind closed doors in the banker's office. And I said it, but what about the part about concern about, is there any concern about solvency of the bank that you're just actually, some of the banks are just trying to keep cash from going out the door? And he kind of got a little quiet and said, well, they don't put it that way, that they said, we got to work on keeping deposits on account. He says that if somebody is trying to take their funds out of the bank for any reason, and that's been increasingly common because of they can't earn any yield in the bank, they're getting 0.01% interest on their checking or savings accounts, that if they're trying to take their money out, we should try to do anything we can to try to get them to consider, well, maybe you want to get a certificate of deposit, maybe you want to get a higher yield special high balance savings account that pays money market rates or something like that. Anything we can do to prevent them from taking cash out of the bank, because that is a concern about keeping deposits on account.
I mean, so, that's no different than Bernie Madoff trying to tell people to not cash out because the market's going to get better. I mean, it's a Ponzi scheme, in other words, and it is. If you realize that more people pull their money out than they're able to deal with, the bank goes under, and now you are an unsecured creditor and you will be bailed in. They made bailouts illegal in 2009. So yeah, it's a situation where you can see that. And I don't know that it's just for buying precious metals. I think it's for anything, any withdrawals, you're going to get pushback. And even when you go and try to take out a few $1,000s in cash, they're going to ask you, what do you plan on doing with this? It reeks of desperation. And I find it to be, the more desperate, the more concerning. I find it to be kind of frightening. At the very least, people should have several bank accounts. If you've got multiple six figures in a bank, you're crazy. You should have 2 or 3 or 4 banks and try to at least spread that risk around, and, maybe do not just a large bank, but, even something like a co-op bank or a small savings and loan, or just spread it out, because they're telling you, the FDIC is telling you this is coming. Or better yet, just keep smaller balances in your bank account, or maybe in a non-margined investment account like Schwab, and a non-margined account, cash account. There are better choices right now than leaving it in a savings account. I mean, heck, I'm not a fan of treasuries right now because of the risk of rising rates, but I would feel much better putting my money in 90-day treasury bills than leaving it in a savings account. At least you're making a return, and at least you're going to get back money. Whether it's inflated or not is debatable, but I think the banks really are becoming not a safe place to put your money, and very confrontational. So, you have to think twice about that.
We've got a very interesting question asked early on in the stream by a viewer. I'm going to try to get back to it here, and that is, let's see if I can find it here. I remember it in general, but I'll have to paraphrase it because the list has become quite long. The question was, what will the dollar be worth once gold and silver reset to their proper value? And I thought, well, that's an interesting question. What will the dollar be worth? How do you even have a discussion around that? And the only thing that I can come up with is what the rest of the world, the BRICS and so on, as you point out, have figured out. And they're voting with their feet, and they're going to real things. They're going to commodities. So if you say, how much would the dollar be worth? Well, back in 1968, a dollar was worth 5 gallons of gas at one point, because I saw gas for 19.9. Today, the dollar is worth about a quarter of a gallon of gas or less. So the dollar, how do you want to measure the dollar? How can you talk about it? You want to talk about it in terms of gold? Well, back in 1933, the dollar was worth about 1/20th of an ounce of gold. Now it's worth closer to 1/2000th of an ounce of gold. So I just thought if we'd float that out there and see, because you think about this stuff a lot, even in the middle of the night, I know. So what do you think about when people ask you, what's the dollar worth?
Well, that's the thing. If you grew up in Europe, you would look at valuations differently, because before the euro, the distance between Minnesota and Wisconsin was another country. And so you would think in terms of not just your local currency, but in terms of other currencies. We're very dollar centric here. We arbitrarily value everything in dollars. And to your point, what do you measure it against? The dollar index is measured against a basket of other half dead currencies. And so what do you measure it against? I think gold and silver are the ultimate barometer in which we would measure it against, or things like oil. Absolutely. But, I think that in that environment where gold and silver are going higher, I would argue it's not gold and silver going higher, it's the dollar going lower. And gold is, like I've often said, gold and silver are like, if you envision a coin sitting on the ledge of a bathtub, the water underneath the ledge of the bathtub is the value of the dollar. You pull the plug on the value of the dollar, it's not that gold and silver went up, it's that the dollar went down. And I think that's the better way to look at it. As it is right now, commodities globally are measured in dollar terms. And if gold and silver are to be revalued or to accentuate, it's going to come at the expense of the dollar. Another way to look at that would be 1933, when gold was confiscated back there. Roosevelt paid $20.67 for every one $20 gold piece people paid in, and then they revalued the dollar to reflect gold at $35 an ounce. It was a 40% haircut. So, are you revaluing the dollar, or is the price of gold going up, or is the dollar going down? And I think any way you cut it, it's not going to be gold and silver going up. It's going to be the dollar going down. And another way to look at it is that, look, gold hit its all-time high in euros this year. It was up 12% in British pounds, but in dollar terms, it was flat. So it's the dollar that we need to measure. It's not gold and silver, which are the barometer. And there's the old story. You go back to 1900, where a $20 gold coin would have bought you a suit and shoes and a tie and an overcoat, the whole 9 yards. Well, $20 now doesn't even buy you, a tie, but the 1 ounce of gold that the $20 gold piece is, $2,000 is going to buy you that same suit and tie and jacket and the whole 9 yards. So it's not gold going up or down. Gold and silver remain relatively stable throughout all of history. It's the value of the currency we measure it against. And ultimately that has to go down. And I think that will happen as more and more countries continue their de-dollarization, which we're seeing more of it again today. We just saw in the Egyptian parliament just approved the announcement that they're joining BRICS. They said, we're all for it. More and more countries are moving to join BRICS. And one other thing I'd like to mention, when you talk about what could accentuate not only gold rising, but the dollar dropping, you know, Alistair, who's on your show all the time, brought up a very interesting topic that I don't talk enough about, the Shanghai Cooperation Organization. This is a massive regional defense, security, and economic group. It's the largest regional group in the world. It comprises nearly 60% of human population, 60% of the Eurasian landmass, 40% of global GDP. And it is his belief that they are discussing to use a new gold-backed currency system or settlement system for the Eurasian continent in trade. And so whether it's the BRICS, whether it's the petro yuan that is backed or convertible into gold, or this new Shanghai Cooperation Organization trade settlement pegged to gold, you are seeing more and more and more and more rhetoric about gold. Heck, the IMF, that was the other thing I wanted to talk to you about. The IMF, remember, we talked about how in 2020, the IMF came out and said, we want a new Bretton Woods. Well, for those of you who don't know, the IMF is a conglomerate of about 150 countries from around the world that was formulated at Bretton Woods. And it is a Western-friendly organization. And they just came out with a brand new report that was just issued a day or two ago. And it's titled Gold as International Reserves, a barbarous relic no more. So, you know, you got the IMF who wants a new system touting gold. You have all of these countries accumulating gold. Do you think there's any coincidence that the central banks have bought more gold than at any time in the last 55 years, and the IMF says it's no longer a barbarous relic, and just publish a big report on it, January 2023? I mean, and I was asked a question, by the way. I did an interview with Kitco, and I was asked a question. One of the best interviews I've ever done. The lady, I think her name is Michelle McCory, asked incredible questions, really smart lady. And she said to me, what could derail the dollar getting crushed? Because of my thesis that I've had developed about the BRICS nations joining together. And I thought about it. She said, could it be war, a really bad war? And I said, no, I don't think so. Could it be Russia losing the war? No, I don't think so. I said, because even since the sanctions, 80% of the world's still trading with Russia. They don't view the sanctions the way the West does. I said, what if the West beats the BRICS to the punch, like this IMF report? What if the IMF comes out after all hell breaks loose in our markets, and they continue to let rates rise, and the markets collapse, the economy collapse, we go into a hyperinflationary depression, and people are begging for a new system, and they come out with a central bank digital currency pegged to gold? What if? Would that stem the tide? Could that reverse things? Maybe. And I said to her, if they did that, certainly they wouldn't make it convertible like that was, because de Gaulle proved that convertible currencies convert when he started to drain all the gold before Nixon closed the gold window. But what if they pegged every new dollar to 10% pegging to gold, and the veracity of the gold that would be audited by the big three, held in some independent vault or Fort Knox, but yet audited by independent auditors, say it's all there and show it on a distributed ledger technology? Would that reverse the stem or slow the tide of money leaving the dollar? Maybe it would. And I thought, yeah, maybe it would. So, I think it's interesting, the timing of this report, that the IMF calls gold no longer a barbarous relic. At the same time, the central banks have gone on an incredibly large buying spree, using the suppressed paper price as their cover. And, we talked about a couple of weeks ago, I asked my trader, what does it cost to control a gold contract? And I think the number was around $7,000, controls 180,000. Well, if you're a central bank or a commercial bank with a few $1 billion in your margin account, you can create whatever perception of reality you want. And that allows you to misdirect people and do what you want, and take possession of this metal and reposition and prepare for when the IMF comes out and says, well, maybe gold's not such a bad thing after all. So, these are very fluid, crazy times. And maybe the US does have an ace up their sleeve. God, I hope so. I'm a patriot. I love this country. I got young kids. I want I want to have a great future. I don't want to think about destitute and depression and hyperinflation and war and all of these things. So maybe, just maybe, something to be optimistic about when we see the IMF come out with a report like that.
Well, people have been watching a lot of announcements from officialdom, and again, as Jim Rawls said on our channel, I think it's a couple of years ago now, we're living in the age of deception and betrayal. So plan accordingly, invest accordingly, relocate accordingly. There's lots of questions in the chat stream talking about. I'm going to zero in on a few people talking about whether the world debt clock shows a valuation for gold and silver, and it's generally, I think that it's calculated by dividing the national debt into how many ounces of gold and silver that represents, that sort of thing, what it would take to pay it off based on the above ground supplies of gold and silver, that sort of thing. But there's questions about whether that's a valid way of looking at the value of gold and silver. Any thoughts from you on that?
I think it's a better way to look at it would be the amount of money in circulation, but they make that so darn hard. They took out M3, which used to be the broadest measure of the money supply, and M2, and now they're changing the way they measure inflation, and they're making it very hard to really figure out what the real value of the dollar is, measured by how much inflation and how much money creation we have. And yes, that would be one way to do it, is you take the total debt burden and divide it by the number of ounces of gold at Fort Knox, and you would then become solvent if you raised it high enough. And that was one of the things that one of the central bankers, I want to say from the Dutch central bank, came out and said all of this gold that the Europeans have on their balance sheet is in what's called a revaluation account, if I'm not mistaken, and it's all valued at $35 an ounce, the way that it was prior to the closing of the gold window. But they're not allowed to offset that on their balance sheets against liabilities. And so if they wanted to get their balance sheet solvent again, they would revalue gold to a level high enough to offset the liabilities on their balance sheet. They would have to do some accounting changes. But indeed, that would be one way of doing it, is to raise gold up to $10,000 an ounce. And I don't know what the number would be, the 31 trillion in debt, which doesn't even take into account the unfunded liabilities, versus the 8,300 metric tons of gold that we supposedly have that hasn't been audited since 1956. So if you divided that out, it's going to be somewhere north of $10,000, I'm sure. And that's where Jim Rickards would say that, and Jim Sinclair would say that, and maybe why it would never come back down, because at that level, it would be pegged to a new system and it wouldn't come back down. But it would work, I guess, if they were able to revalue. I mean, that's what FDR did. He revalued gold and restocked the coffers. So it's revaluing gold or debasing the currency. I mean, here again, are you dropping the dollar or raising gold? Take your pick, is the chicken or the egg. But that would work, and I don't know what number it would be, but that is what that is supposed to be a reflection of.
I just realized I didn't give you a chance at 1:30 to tell people about our weekly special. I understand you've been talking about a sweet spot for the last couple of interviews where premiums have come down so much through November, through December. They haven't recovered yet in January. You don't know how long that can hold out given the increased demand that we're seeing in January. So you're talking about, I think you've got a sovereign coin special that's got some amazing low premium compared to anything we've been offering for many, many months.
You'll have to correct me if I'm wrong. Like, my brain feels like a Nerf ball tonight after traveling so much.
Let me share the graphic here.
I think it was 329 over spot.
That's correct.
Right?
Yep.
For the 2023 Vienna Philharmonic. And that's the best price that we've sold a sovereign coin for in 3 years, not even close. 60 days ago, these were probably double that. So it is a very good price. And ironically, and again, when you talk about counterintuitive nature of this industry, this took me totally by surprise, where, I've never seen premiums do anything like this. I mean, I've seen them go up really fast. I've never seen them come down this fast. And this at 329, you're roughly 60 cents above what they've been sold for most of my career. So when you talk about getting a real value, a good value, not overpaying for a sovereign mint coin. This is the best price I've seen in a long time, and really not too far-fetched from anything we've ever seen. And I think it won't last. I really, truly do. I don't think the last 2 years were an anomaly. I think the last 2 years represented a little bit of an awakening. And I think the awakening has yet to really happen in the mainstream. I think 2022 awoke people in the mainstream to, to their portfolios really getting clobbered, and even the hedge, the treasury side of their portfolio getting clobbered. And the more we see this, another quarter of it, the more we see the underperformance of the equity markets, of the bond market, I think people will wake up, and a little bit of allocation from the mainstream into the market just obliterates the supply. So I do think it was a sweet spot, and I've hammered this home. I really do believe people were fatigued and wanted to get out and unplug and not think about anything but being with their family and having fun. And that was what I think Thanksgiving, Christmas, New Year's represented for the public. Coinciding with the new 2023 allocations, it presented the most aggressive down spike in premiums I've seen in 3 decades. And now they're starting to level. And we saw a little uptick in gold eagles. So maybe that's the beginning of where premiums will start to rise again. Maybe not. But I will tell you that the numbers of sales in January versus December are night and day. And so December, you could have just shut off your screen and went out and played golf if you live here in Florida, not in Minnesota, where I'm from. You could have went skiing, but you could have done that, because it just really industry-wide was quiet. And all of a sudden people are back to reevaluating their plans for the year, and reevaluating what's happening in a world that seems to just be spinning so fast, and things continue to happen at blistering speed. So there's interest again. And when that interest continues to permeate the mainstream, the way that I believe we are again here this month, with the calls, I'm talking to a lot of financial advisors again this month, a lot of larger orders again this month. And none of them about getting rich. None of them about, I want to buy this as an investment. I want my money out of the bank. I'm freaked out. I don't trust the government. I don't trust my 401k. I don't trust. The removal of counterparty risk is what we're seeing. And as that continues to ever so gently permeate the veneer of the mainstream, yeah, I think you will see us go back to elevated premiums, because there's just not enough supply out there in a world, not just North America, but a world that is aware of what's going on. And I think is afraid for the first time, of all these years where it's been about greed and making money. Now it's transitioning to keeping what you've made and afraid of what's coming. I mean, I look at in a court of law, if you were to provide someone with a weapon, give them money to fund their exploits, and provide intelligence on where to shoot that weapon, I mean, aren't you an accomplice? And I really am very concerned that we are pushing things with war, the drumbeat of war. And now they're asking for F-16 fighter jets. I mean, it's just insane. I think that people are concerned, and that will drive an interest, even albeit a little interest, to the mainstream. And then we're right back where we were in 2020, 2021, and 2022, with far more demand than there is supply.
This may be a little off the pace of what we were talking about, but there's a lot of questions in the live chat right now about, where does Andy live? You made a rather public announcement about relocating from your ancestral home in Minnesota, where you and your dad founded Miles Franklin 33 years ago, to the state of Florida. And could you bring us up to date on why Florida, why leave Minnesota, and what you found there, what you've learned along the way?
Well, one of my oldest friends, one of the common themes at Miles Franklin, and you know this, Dunnigan, is that almost everyone who works for my company are friends that I've had all the way back to childhood, little league, elementary school, junior high, and high school. Almost everyone, literally, including my sister, and my father and I started it. And all of my friends who are brokers or admin for me. And so, Minnesota has always been very important to me. One of my friends, my oldest friend, asked me 12 years ago for various reasons if he would mind if I would mind if he opened a satellite office in downtown Delray Beach, Florida. I said, sure, go for it. That was 12 years ago. Living in Minnesota, I was always very, very proud to be a Minnesotan. I bleed Minnesota purple. Two of the greatest memories of my life are the 1987 and 91 World Series. I mean, I loved being in Minnesota and always have until I didn't. And when COVID happened, I realized that I didn't need to be in my office every day. That, my wife would say, let's leave Minnesota. And I'm never leaving. I would say to her, I'm never leaving. I got an office. I have family. I have friends. I can't leave. I got to be there. I haven't been to my office in Minnesota for the better part of 3 years. And when George Floyd happened and the defund the police movement, that coincided with me becoming very public on YouTube's. And it got to be frightening, truthfully. You could have Googled my name and found where I lived in Minneapolis like that, in the woods. And it was concerning. The police weren't coming. They were telling us that the Antifa movement was coming out into the suburbs. And I was sleeping with a handgun on my nightstand every night, thinking before I go to bed, the last thought before I would go to bed would be, if my alarm goes off, what do I do? And that's no way to live. It just isn't. It sucked, it really did. So I moved, and it was the best thing I ever did. And I live in Southern Florida and not too far from our office in Delray Beach. And it's just a whole different vibe here. I live in a very safe community with like-minded people. Now, of course, the 10% Minnesota state income tax certainly had a lot to do with it. Once I got here, I realized, what the heck was I paying 10% for in a state where they let the city of Minneapolis become eviscerated and burn down the second precinct on national TV and then raise income taxes in 2021. I said, the Governor Walz is out of his mind. So I left, and I never looked back. But when I left, it's an interesting thing. I left to go on a vacation, and that would have coincided with Silver Squeeze. It was my parents rented a house, and my dad called me and said two things. One, Mom and I just bought a place, a condo in Florida, and the house that we rented, I'm bored as hell. So why don't you bring your family down here? We're going to go home. Okay, I came down there, and when we landed, it was right around Silver Squeeze, and this all was happening. And I hear Governor Walz raise income taxes. So I said to my dad, give me the name of your real estate agent. And the only time I left the house for 10 days was to drive across the state to where I live now, to a community that I've known about. I have friends that I grew up with that have families that have homes in this community. And it was a golf community. I walked in and I said, I'm never leaving. I left for a vacation. I came back with a new house. If you would have told me you're going to come back with a new house, I would have bet you everything I had that wouldn't happen. So the bottom line is simply this. I love it in Florida. I feel safer in Florida. I think you paying a 10% income tax on top of 39% federal and double FICA owning a business and all of the taxes we paid was not representative of what I felt I was receiving in return in the state of Minnesota after all of this stuff happened. And it was the best move I ever made. Truly the best move I ever made. It's a wonderful place to live. And it saddens me because in my heart, I'll always be Minnesotan, but Southern Florida is for me. And I would encourage people to make that move if you're on the edge. There's a lot to be said for quality of life, and there's a great quality of life down here. That's for sure.
There are questions that arise about Miles Franklin. People understand it's been in business for a long time. People understand it was founded by you and your dad, still family owned, and what a trustworthy reputation you guys have earned. Circles of trust, Rick Rule and his whole a group of vetted companies of which Miles Franklin is one, et cetera, et cetera. They do express some questions, newbies do, when they're trying to make sure that they're dealing with somebody that they understand. When we say, well, our corporate headquarters are in the Twin Cities of Minnesota, our CEO lives in Florida, the bank that you need to wire your money to is in Indiana, excuse me, and our bullion operations where we're going to be shipping to you from is in North Dakota or possibly Florida. So can you help people understand?
That's a good point. I should have brought that up. the reason I left my corporate entity in Minnesota, and I don't know if you know this, Dunnigan, but the state of Minnesota had a little bit of a question as to what they were going to do with their licensing, but they've re-upped it again. And so the state of Minnesota is the only state in the United States that mandates licensing and bonding in what is a federally non-regulated industry. So we're very proud of our reputation, and we're very proud of our U.S. Mint accreditation as an authorized reseller, and the A+ rating, and our worldwide exclusives with Brinks, and my relationship with Rick Rule, and all the folks that I've met along the way that, that symbolize integrity and honesty and the right way to do business. And that means an awful lot to me, because I've been doing this since I was 19 years old, or 20, really. The state of Minnesota doesn't care about our reputation. They are the only state in the United States where you have to post a large surety bond that is personally guaranteed by myself. And background checks of everyone who holds a license, everyone, including operational staff, and annually, that is. And if anyone had a felony during the course of the year related to anything in financial services, they are forever disqualified for being in the industry. And of course, the continuing education, which we just did recently, and your son masterfully reads the questions as a voiceover actor or whatnot, and that takes 3-4 hours on an evening that no one wants to do. But what it really does is it holds us to a much higher standard than everybody else, and I hang my hat proudly on that. In a world of counterparty risk, in a world of cynicism, where you really skeptical that you can trust someone, like you said, we are really we embrace the licensing and the bonding and the accreditation and what it means and what it stands for. The majority of the companies in America will not send product into the state of Minnesota for that reason, because of all the 48 states, in the continental US, it's the only one. You go take Hawaii and all the other ones too, same thing. You can send it to every one of those states, but not to Minnesota unless you're licensed and bonded, and they'll come after you if not. So it holds us to a much, much higher standard. The bank that we work with, which is located in Indiana, used to be a different bank. It was bought by Old National, which is located in Evansville, Indiana. It was a very small regional bank about 6 blocks from my office in Wayzata, Minnesota. And so it just so happens that the wire instructions go to the corporate entity in Indiana. So it can be confusing. Corporate office in Minnesota, satellite office that's now 13 years old in Delray Beach, and our bank, which has branches in Minnesota, corporate office in Evansville, Indiana.
Well, thanks for that overview. People have asked in this chat stream if they live in Florida and want to take delivery of their metals in Florida. Now, we always ship anywhere in the U.S., but if they want to be able to pick up their metals, can they pick them up in Florida or only in North Dakota?
On special circumstances, yes. Our office in Florida is just it's an office. It's not, we have a warehouse, so to speak, in Florida, both at Brinks, Miami, and one in Boca Raton. But it is not that's not where our office is located. And so it lacks the security that we would want and feel comfortable about having large amounts shipped to that office. Now, I have met people at Brinks, and I have met people in Boca before recently, just the other day we did. And that is doable. It's not something that I like to do very often. And if it was a large enough order and it made sense logistically for someone, we would do what we could to do that. I mean, the shipping to Florida is going to be free anyway, but for certain people in certain circumstances, and I'm not trying to sound elitist in any way, shape, or form. I'm just trying to be practical. We do thousands and thousands and thousands of orders a year. So if I made that promise, it could get me in some hot water. But yes, on certain occasions, we can do that. More often than not, we prefer to have it shipped directly to them, but we are open to it on certain mitigating circumstances.
Well, Andy, you've been very generous with your time. We've kept you up. Sounds like you've been up for 2 days.
Good.
So
I got my second wind.
I thought we might. I think this is something that you really shine at. You enjoy this interaction where you're able to answer
Way better. I
questions.
like it way better. The only thing I don't have, I can never see the questions. I wish I could see the questions too, but that's okay. I enjoy it. And I don't mind the tough questions either, because those are fair. I think tough questions are important. You haven't thrown any at me, but you have before,
Well,
and I don't mind the tough questions. I think I don't want to hide behind anything.
Here's two that Silver Switch 176 has suggested several times. Ask Andy if Miles Franklin would ever consider offering free shipping over $200 orders like other large bullion dealers do. Also, how is the website coming along?
Yeah, so I'll answer the second question first. You're privy to a little bit of this. We've had to let people go who were supposed to have done things that haven't gotten done. Including the two things that this individual was supposed to have done that he completely neglected was the Avalara tax software integration and the credit card integration into the back end of our website. And when I found out that this person had completely neglected all of it, I almost lost my mind. I will tell you, it has been the most humbling and embarrassing event of my career. What should have been done, I mean, we started with a developer, and that developer more or less overpromised and under-delivered, and we switched in midstream to a new developer who's done a decent job. But now my operations staff, there were some people there that completely dropped the ball, and we've had a series of missteps. And I've been telling people, I was told that we would have a soft launch on August 22nd of 2022. I told the public that. It has been as horrible of an experience as anything I've ever dealt with in 33 years of owning Miles Franklin. And we will get there. And at this point, I said, I do not want to roll it out until it's ready. Now, I know the gentleman who does my tweets said he's going to tweet that we will be doing a soft launch in the next 10 days to 2 weeks. We're very comfortable that we're there. The website's done. It's the integration of the software and the tax software, the stupid tax software, where there are still some states that charge tax on precious metals. A lot of them, like Mississippi, are rethinking it, and Tennessee did it, and Ohio did it, and they're relinquishing or getting rid of, repealing their archaic sales tax law on precious metals. But that has to be in the website when everything we've done has not been web-based. And when you're dealing with smaller orders and you're dealing with counties and municipalities, and the way that these things are taxed, you can have the state of Mississippi tax rate, but different rates in municipalities and counties. It's unbelievable that the Wayfair decision was allowed to go through. I mean, the barriers to small businesses and tax, it's $14,000 just to get the software put in. And that's before keeping up with the license and the constant money that you put into keeping it relevant and whatnot. So we're almost done. And all I can say is I'm sorry. It is not a reflection of the way I do business, but it has been very humbling. And I learned a lesson not to speak before you're ready to roll. I should have verified before I spoke. As far as the shipping is concerned, that's an interesting one. And I often wonder about that. I understand what they're saying. Look, our shipping, the most it ever is $15. And a lot of these companies will do things like that, and they'll lose money. That's not the business model that I really choose to do. As is, we lose money on shipping. A lot of the items that people are buying as well, like backdate coins, a lot of the companies that are giving free shipping are selling these coins at huge premiums, and we sell them at a discount. Now, that's maybe not even a fair thing to bring up right now, but simply to say this, that the way that I look at it, and I say this with all due respect, I don't want to race to the bottom. I want to be as competitive as anyone in the country. And I want to provide that great service. And, if there's a problem, you get on the phone and call us and we make it right. And we've proven that. And if someone would not work with me over a $15 shipping charge, and I say this with all due respect, please understand this. If you ran a business like mine, you may look at it this way too. I don't know if that's a client I want to do business with, because if it boils down to $15, and I'm going to lose money, but keep this person happy, is it really the model I want? I don't know. I mean, I want to work with everybody, of course, but it's interesting that these companies do that, because if you're selling, let's say, 8 ounces of silver, right? And those 8 ounces of silver are 200 and whatever, $25, and you get free shipping for it. We're lucky to make $8 on that. Probably more like 6 or 7, and shipping costs 3 times that. And so it's a loss leader for these companies, I guess you could say. It's not something that I have really looked at as if people are going to be that bent out of shape about that, then I wish them well, and they should buy from another company. And I hate to say that. I don't know any other way to be honest about it than to say, if you own a business, you should not be required to match other people to lose money. And that's the way they gain market share. That's the way they get clients. I respect that, just like I do a special and don't make very much on the special, but I make something, enough to keep operations going, enough to pay for the shipping that keeps increasing, enough to pay for our brokers who are there to talk to people, all who have a rich experience in this industry, in geopolitics, and can talk to you rather than, just do it very impersonally with a website. And that may not be the answer that someone wants to hear, but it's the truth, and it's the honest answer. And I'll always work with people if they say, can you help me? Yeah, maybe I will on here and again, but to just simply give free shipping on under $200 order, I'll tell you that those companies are losing minimum of $10 on every single one of those orders. So you do thousands of them in a year, you're losing maybe as much as hundreds of thousands of dollars. And that's just not a model that I really like.
Well, we are out of time. We're a little bit over. I'm going to have to wrap us up, but I wanted to leave everyone with a couple of the messages in the chat stream. Freedom for All says, tell Andy we know he's doing the best he can. We're extremely excited to have the website as soon as he's ready. And Frederick Newcomb says, may God be with Andy to resolve any more issues with his website and billing.
Thank you.
And we have TNT PKK says, this man is so amazing. So we're going to leave
I really
it with
appreciate it. Again, I love all these people. I love talking to people. Look, let me just say one last thing. I know we're out of time. I own the company. I've done this for 33 years. I talk to people all day long. And there are a lot of people watching this who have my cell phone number, and they call me and they text me, and I'm accessible, and I bleed internally when people are upset. I do. I mean, it keeps me up at night. I got people I really respect that I was talking to at the Vancouver show, people that all of you watch and listen. He says, you got to stop doing this. You're going to kill yourself. You need to not work so hard. You need to work smart, but that's not who I am. What you are paying for is a company that would rather fall on broken glass than allow something bad to happen to one of our clients, or a problem to go unresolved. So if it means paying just a few bucks more in shipping under $250 or under $500 or whatnot, the way that I personally do it is, shipping is free if you buy over 100 ounces of silver or 5 ounces of gold. And I eat that, because what is our company's policy is 500 ounces of silver and 10 ounces of gold. But I do it on 100 ounces and 5 ounces of gold, and I lose money on it. But look, it's a fair point, and I like the question, because people should understand how this market works, and nothing is for free. Go try and ship a couple silver coins to a buddy in another state, and you'll be blown away how much it costs and what a pain in the butt it is. So, it should come down to more than $15, in my opinion. But I love everyone. I love the kind remarks. I love you, Dunnigan. I love this give and take, and thank you for all the kind words and prayers and sentiment. And I'll look forward to being back here with you next week. And I'll always shoot from the hip and be honest. And that's one thing that you can all count on from me. I will be honest and straightforward and as transparent as humanly possible to try and make heads and tails of a very confusing time. That's the best I can do.
And as we sign off here, I'm going to leave us with one last comment from a viewer. RK Jr. says, trust is what I enjoy with you, Andy.
Thank you.
So, all right,
Appreciate that.
everybody, you all make it possible. Thank you all for being here. Andy, get some rest for goodness sakes after your 2 days of travel. So thank you, everyone. And we're going to wrap. Thanks, everyone, for being
Be
here.
well, you guys.